first of all, if you look at the last 10 years of activity in markets around the world, equity markets, you'll see that in 7 of those years, emerging markets outperformed the US market and the global markets. Now, it's true in the last few years, you've had underperformance by emerging markets, but now we're beginning to see a turn, that emerging markets are coming back again because the markets came down so low and the valuations became so attractive that investors are coming back in again. But that's the market. I mean, the markets are so volatile, it's not a really good reflection of what's happening on the ground. If you look at the economic growth of emerging markets generally, even with the problems in Russia, even with the problems in Brazil, the reality is that emerging markets now growing on the average of 5%. And in the case of Asia, the average growth is 6%. So that's 3 times more than the US growth, and 3 times more than the global growth.
Right.
So if you know that, you know that things are not dead in emerging markets. Emerging markets are doing very well. The 2 most populated countries in the world, India and China, are growing at 6 or 7%. Now, I know many people have bemoaned the fact that, China is slowing down, their ex-growth and so forth. I don't understand this thinking, because here you have the 2nd largest economy in the world growing at 6 or 7%. It's an incredible growth. And a lot of people forget to look at the numbers. In 2010, China was growing at about 10%. At that time, roughly 800 billion US dollars was added to the economy. In 2007, China grew by 7%, but 900 billion was added to the economy because the base is getting larger. The emerging markets tend to be somewhat more volatile than developed countries. And the reason for that is that the largest mass of money going into emerging markets comes from the developed world. So whenever there's a problem, and particularly if their own markets, the US market, is doing well, they will retreat and take money out very quickly. And then, of course, that creates volatility. If you have volatility, you have more volatility. Because if, once the herd starts moving, then the whole herd moves out. But it happens in the opposite direction as well. Once it becomes popular again, they'll all be moving back in again. So we have to be ready for this volatility. We have to accept it and say, okay, this is what we can expect going forward. The other good news, of course, is that the internal markets are becoming bigger. In other words, the local investors are becoming more and more important. So they will tend to reduce the volatility going forward. Yes, it's affected in a good way and a bad way, because you have countries like Russia. Oil price decline has decimated the country. Brazil also affected negatively as a result of that. But then you have a country like India or China, it's positive, because you're a net importer of these raw materials. So although the Chinese market has slowed down, the growth has slowed down, the reality is that they're in a much better shape because of these low commodity prices. So on balance, latest calculations I've seen is that about 70% of emerging market countries have benefited from the decline in commodity prices. Many people make the mistake of thinking that emerging countries are dependent upon commodity prices, but that's not the case. Yes, many countries in Africa are dependent upon it. Many countries in Latin America are. Eastern Europe, no, except Russia. and Asia, no, because most of them are net importers. Even a country like Indonesia, who used to be a net exporter of oil, no longer exports, they import.
Okay.
Because of the population demand.
Right.
Another reason why, as you know, there's a direct link between inflation and interest rates, and inflation has been down.
Yeah.
And a lot of that is because of lower commodity prices. And that means interest rates down, which is very good for these economies. We were negative, you know, when the index was going up very, very rapidly. I, at that time, said, look, there's a possibility of this being a fall. And somebody asked me, how much do you think it can fall? I said it could fall by as much as 20%. Oh, no, it could never happen. Then it happened, and I looked like a genius. Of course, it came down more than 30%.
Yeah.
But you didn't have to be too smart to figure out that this market would fall. The problem is that the government stepped in to try to support the market. That was a mistake, because then it sent confusing signals. But I still think that despite these missteps, the market will recover, will be coming up now. Because there are many bargains, many opportunities.